Good morning. Welcome to the State of the Market today. How is everybody doing? And you might be asking, what state of the market? What market? Well, when we started doing this show a couple months ago, stocks used to move. SPY used to move. Right now, SPY is not moving, SPX isn't moving, and VIX is still trading 17. What could possibly be happening? Any guesses? We are waiting for this market is now a market of waiting for President Trump to say something. And I believe that date will be around July 9th. That's what it is. So I think the market is stuck until next week because everybody got fooled by Liberation Day. And we could have the same thing over again. And after that, they could crush this. VIX could be 14. I feel like it'll be 23 or 24 or 14. Those are our choices by the 10th and 11th next week. So we could sit here and talk about VIX here and there. The big, the Senate passed a ridiculous bill once again. So that really wasn't enough to boost stocks. This is actually, didn't we do a Reddit trade in here last week? Didn't we do a Reddit trade last week in here, I believe? I think we did. It's up a couple of shekels. We bought the 180, 270 calls, 250 call spread, right? I could swear on Friday. Anyway, I own a couple of them, so I'm not complaining right now. So today what I thought I'd do is, so there's a couple things going. I'm going to have, for those of you that are capital gains people, I'm going to have Frank, I've got some questions for him, but what is happening in biotech and pharmas, big pharma? So basically what's happening is JFK Jr. is not going to get rid of all advertising for drugs. He's going to try to make it better, more fair, more real, stuff like that. So now, so all of a sudden, shares of some of these biotechs are starting to do a little better. Pfizer, and I'm Pfizer's an example today for what I want to do is Hans is going to talk about income strategies tomorrow. What I want to do is cover what I believe is the simplest income play out there, right? What I call a triple income play. How many people have bought a stock to collect a dividend before? Raise your hands. Probably step number one for anybody trying to be an investor. All right. I'm loving right? So what I want to do is, how can we make 3 times the money? So what I want to do is 3x my normal dividend return. So let's see if we can do something around that. Okay. Now I think Leisha, if I'm lucky Leisha has given me a if if I'm lucky. Leisha. Oh, Leisha, where is my pitchfork thingy? I was hoping she's going to do a pitchfork thing for me. For Pfizer. Maybe she did, and I just didn't see it. All right. Anyway, it will be coming. So, so what I want to do here is, first off, does everybody know? I just wanted a pitchfork for Pfizer. That's all. Does everybody know when a dividend comes, when it's going to be paid, how it's paid? The first date you have to worry about is the XD date. Everybody know what the ex-dividend date is? Like in my retirement account, I'm like everybody else, own a bunch of stocks, own a bunch of dividend paying stocks, and I'm like, wow, how much income are dividend paying stocks going to pay me? How much income is TLT going to pay you? So the first step is the XD date. So the thing is, you have to own the stock on the morning of the XD date in your account. That's number one. So to collect a dividend, you have to own the stock in your account the day before XD date. So if you own calls and you want to exercise them, you have to exercise them the day before. This is the thing that most people screw up. Right? Because they think they just buy the stock on the XD date and they get it. It doesn't work like that. You have to own it the day before. It has to be in your account on the morning of. That's step one. Now I'm going to ask another question. What is the risk difference between selling a put and buying 100 shares of stock? What's the risk difference? Do you think it's the same? You think it's different? Right? So a couple things. The risk difference basically is if you sell a put, do you have to pay a dividend against that short put? You do not. You do not. What might happen, though, is you might be assigned that put and you have to buy some stock. Now, if you're trying to collect a dividend, isn't that what you want? Right? If you're trying to collect a dividend, don't you want to own the stock? So if you're doing a triple income play where I'm going to sell a put, take the stock, collect the dividend, and then sell a call against the stock. Mark, Texas. This is classic. It is crucial to understand. You must have used AI for this. It is crucial to understand that selling a put still carries significant risk, especially if the stock price drops sharply below your strike price. Always ensure you are comfortable with the obligation to buy the shares at the strike price if assigned. Okay? It's very, very nice. Now, here's Andrew's rules for trading. You want my rules for trading, which is going to make your life very easy? If you buy options, you have to close them. Step 1. Step 2, if you sell options, you always have to be ready, be able to take delivery. Do you guys see those 2 rules? All in caps. Right? Now, a lot of my students at Option Pit have named rule number 1 CTS. Close that stuff. Because even though you're up money, the money is not real until it's closed. Number 2, if you sell options and are not able to take delivery of the underlying, you're going to get yourself into a world of hurt. Does everybody understand what I mean when I say that? If you sell puts, you will eventually own stocks. Guaranteed. Guaranteed. North Point, Florida man says selling credit spreads to limit downside risk. You can sell credit spreads to limit downside risk, but a credit spread is still what? Is a credit spread still a short option? It is limited risk, right? But you also have to be able to what? Withstand the full credit in the spread. No guarantee it comes back. Now, there are ways you can trade it, right? There are a lot of tricks you can do to trade around it. But what I'm trying to give you is this is a stock buying strategy. Okay? So if you follow rule number 1 and rule number 2, you will be able to trade options. So do you guys see rule? Does everybody understand? Even if you're, and somebody's just saying in here, even if you sell a spread, you could take delivery. Anytime you sell an option, that's American exercise, you can be assigned. If you're trading the indexes, it's going to be cash settled. So be aware that this is how the world works, right? I've been assigned options almost every way you can possibly manage. I've been assigned out of the money options. I've been assigned in the money options and it's been total mistake, like all kinds of stuff. So that's why I want everybody to be very clear about this. So when I sell options, I either want to buy stock and there's lots of ways to do it, right? Many, many, many ways to do it to control, right? Now, in this triple income play, is my goal to own the stock? Is that my goal? It is the goal. Okay. And I'll answer questions at the end. It is the goal. So when you're trading, another thing, trading or investing, have a 100% intent on any option trade. Right. What I mean by 100% intent is that the trade you have is exactly what you want to do. So if I'm selling puts, I'm expecting to get the stock. Is everybody clear on that? So the whole point of this is it worth doing? Like, can I make, so if I have, let's say, 500 shares of Pfizer, is it worth doing? Let's go over that. Let's see if it's worth making a couple bucks. So the first thing is I have a dividend of 43 cents on July 25th. So in my head, what does that give me? I've got 1, 2, 3 opportunities to sell puts. So the first thing, step 1, establish your XD date. So we got number 1 and we got 43 cents. So that would be essentially 43 bucks on 100 shares. So that's about 200 bucks on 500 shares. So, all right, we got that going for us. If I sell the 25 and a half puts right now, if I sell the 25 puts for 4 cents, I'm taking delivery of stock at 25. Does that sound very, it does not sound very appetizing to me currently. Like, it's not even worth it. Next week, if I sell the 25 puts for 21 cents on a 5 lot, that's 100 bucks. All right, so now I'm starting to do the counting. So I got, so for 500 shares, okay. Now, for 21 cents, okay, again, I've got a lower entry price now. That on a 5 lot is around another 100 bucks. If I can do that one more time and take delivery, that should be 400 bucks. Now I sell our call out on July 25th, right? Probably on the August 01. And a weekly call will probably be worth 25. So I'm going to say maybe another 20 cents tops. Another 100 bucks. And then we'll see what we can sell the calls for. So right now I'm looking at 500 bucks. All right. If everything goes relatively well, I should be able to sell a put. I always sell another put with juice in it. Right? Because the idea is I want to make sure I own the stock by the XD date, which is July 25th. So need the shares. Now, Pfizer is 25 bucks. So if I buy 500 shares, 500 shares times 25.17. Okay. That's $12,585. And I'm going to divide my $500, which is about what I think I should get, divide that number. So that's almost 4%. Again, depending on what you're paying for commissions and stuff for 1 month. Now, if you get a little lift in Pfizer, you get to sell the 26 call instead. You'll do a little better. Maybe you don't collect all the money in the puts one time. So I would say when doing a strategy like this, it's about the minimum. This is another good strategy in oil stocks, right? Most oil stocks don't go to zero, right? It's a commodity. Generally, when oil prices are low, good strategy for oil stocks. If you want to just, again, you're picking up income. So this is right on, I would say, it's just interesting if I could get a decent sale. So if I would start this by, I'll sell 5 of these puts, let's say at 22 cents. I would get the ball rolling, see if it fills. They go out worthless, I'll try to sell another put. When I'm closer to expiration, I want to definitely sell a put that's almost in the money. Now, do you have an interest in following this strategy from today to next week, to the following week, to the following week? See how it does. So I would say there is some money in it. I think it's a good example one. And I'm looking about, again, I would sell a more in the money put. That way, if we actually got a real lift, you would make real money because your put would go out worthless. So that last put is going to be much more in the money. Okay. All right. So what I'm going to do here is I am going to start my little dingity dang here. And I'm going to try to get 22 cents for the puts for next week. And at the end, we'll see what the total yield is. I'm trying 22 cents. If I can get it, I can get it. I don't, I don't. So just a general Schwab account's charging me about $3 for that. How much of this success of this strategy depends on choosing the right stock in the right market environment? In other words, how sensitive it is to market volatility. So I would say, Hogan, it is a stock buying strategy. So when you have a stock buying strategy, how much is it dependent on the stock going up? The thing with this strategy is, do you need the stock to go up? You certainly don't want the stock to go to zero because you're not going to make any money. You're going to collect the dividend and the stock goes to zero. So generally, I look for stocks that are solid companies, have increasing dividends, and in stocks that I can afford to buy that I expect to wheel out of it. I like the strategy, but always nervous that I will lose the stock on calls is a question. So the thing is, If you're nervous that you're going to lose the stock on calls, Hogan, sell a call spread or trade a diagonal spread. If it's in an IRA, there's no tax on it. Let me see some other questions here. Took delivery of some SoFi at 7. Oh, there you go. Just generate income until credit call is being exercised. Yep. That's essentially what you're doing. You're just like, okay, in a market that might not be going anywhere, or let's say you want $1,000 or $2,000 a month, and you have a couple of stocks that have high dividends, calls you could sell that you can handle buying the stock. You're just trying to get a little bit more. You're trying to get a little bit more out of what the trade is, out of what the stock is. And sometimes when volatility is a little higher in a high dividend paying stock, you'll get good prices for selling out of the money puts. And the last question was, how did you get assigned? So basically, the serial option assignment is on a Saturday. So there was news coming out on a Monday, and somebody kind of knew what the news was. So they assigned all the out of the money puts to people that were about 8 to 9% out of the money. And the stock opened down like 50%. So if you sell puts, like I said, you have to be able to take delivery, because weird stuff can happen. Any questions? So this is a way to, again, to approach stocks that have, and I would say this is a very vanilla example. I like to get 5 to 6% total to make it really worth it. 5 to 6% in a month on a stock, just selling some puts and getting the dividend and selling a call is pretty good. Right? If you earn 5 to 6% per month on any investment, would you be happy? Probably yes. You're like, hey, that's not bad. So this is a technique on how to do this. Okay. And Leisha's pitchfork, hold on. What has she got for me? She gave me a goodie here. So it looks like it wants to go like up to $26. So what I would say with a strategy like this, by the way, is the best technique for this type of strategy is have stocks you like. You keep a watch list and wait till the stock gets to a decent price when the dividend's coming out. That is the best way, I believe, that it works. So here's Pfizer. I'm looking at it. Here's the last year. How much real risk do you have in this thing? Not very much. You can go down. Questions, comments, anything? All right. So tune in for Hans tomorrow. There's a 50% discount on Leisha's masterclass at the end for a free month of Option Shopper. If you want to actually learn how to look at charts and stuff from somebody who's good at it, check out her class. And I will see everybody in Rip Zone, and we'll watch the market kind of do its thing. Again, but I don't expect a whole lot to happen until the 9th of July. Any more questions about this as a strategy, as an idea, how to trade, look for dividends? This is very much a stock buying strategy. All right, everybody, have a good day. I am done.